Hey everyone, welcome to Breakout Wednesday. It is October the 2nd, 2019. It's about 9 p.m. Perth time, 11 p.m. Sydney time, and 9 a.m. New York time on the Wednesday morning. I apologise for the late start. Had a busy day. So the market over the last week has been choppy. It's chopping sideways, up, down. There's a lot of uncertainty with Trump and China, and Trump's kind of cornered at the moment, and he's saying ridiculous things, and nothing new there, I guess, but it's hard to have a strong market when there's all this uncertainty and no one really knows how long it's going to take to unfold. I can't really see the market storming up and having a runaway bull market whilst this uncertainty is taking place. So therefore, I'm being patient, and I'm only like 20-25% invested in my short-term trading account. I'm only taking two, sometimes three, but two new trades usually at once, like two new trades at once. I need my other trades to be going well before I'm willing to take on more risk. If you're new to the market, I know there's a lot of new members out there right now with Protrader, and I'm certainly not taking on, say, 5, 6, 7 new trades at once, because if Trump does something completely dumb and the market's down 5% overnight, then you're going to get hammered on all of those new trades. So I'm scaling, I'm being careful, and I'm being very, very selective, and I'm monitoring my open risk closely at the moment. Okay, so now the market also, the indexes aren't looking too bad. Like, they're just chopping sideways. They're still above their key moving averages. That's the NASDAQ. This is the All Ords in Aussie. And however, there's really a few different markets happening. Like, if you look at some of the sectors, the software stocks in the US are getting hammered. The Chinese stocks are getting hammered. However, the banks and a lot of the large caps like Apple, are strong. Okay, and so you can be making money if you're selective. There's always stocks going up and all that sort of stuff. The other thing is that I've got a predisposition at the moment to small unknown stocks compared to big large cap stocks, just because that these small stocks that people don't know about care a lot less about Donald Trump. He can say the most dumbest thing in the world, and the market can be down 1,000 points. The Dow can be down 1,000 overnight, and these small stocks just don't care about Donald Trump. Whereas the big stocks, the stocks correlated to China, or just some of the big stocks, they just get hammered due to that, whereas the small ones do not. So I'm concentrating on stocks that not that many people know about and are less correlated. Okay, enough of that. I'm going to run through some open trades that I've been talking about and some new setups. So let's get started. Obviously, this is EOS. I've been talking about this for a while. I'm still in it. It's going up, and I've got half my position open still. I've got my stop loss trailing up, and I'm letting it run. Okay, so certainly no sell signals there. I know it gapped up. I know it's raced up, but I've already sold half, and the other half, I don't know how high it's going to go. Last week, I had a desire to sell it because I thought it had gone up heaps, and I held, and it's gone up a lot more. So I'm not going to break my rules. This is what trading's about, being disciplined, letting things run. And, all I need is a couple of these EOS trades a year, and I'm going to have a really good year. Okay. I'm not a trend trading. It's not about grinding out like a day trader and, taking, a million trades and winning 55% of them. It's about, sometimes you can only need to win 30 to 40% of the time when you're a trend trader, or less. I know people that win 20, 25% of the time, but if their losses are small and they have some massive, massive blowout winners every year, then they're going to do really, really well. Okay. And so that's what trend trading is about. It's about following trends until they end. Okay. So BWX, I talked about this last week. It was forming this tight flag pattern, broke out, and I got filled on that, and I'm still long. So, I think this has more in it. I'm obviously still long, and I'm going to hold it. And I've got got it written down somewhere, but I'm going to be selling half of this. I think it's about up here, and then I'm going to be letting the other half of that run. So Now, I had to make a decision. I talked about a few setups last week that I was watching. However, because of the market and the state of the market, I'm only taking, say two, as I said before, two new trades at once. And so I had to make a decision. What was that going to be? Because there were a few setups last week I liked. I took BWX and I took INR. I left Fletcher Building and what are the other ones? I kind of forget now. So now why did I make that decision? I like this one because I liked BWX because it was above all its moving averages, and this was just such a tight range. It had gone on for probably 3 weeks, and it was just all tightening up. I love the volume. I love this volume here. I love the dry up in volume on this day here. When was it? The 23rd of September, where we had this red candle down on pretty much zero volume. It's amazing how often that happens with the successful trades. You just get this tiny down day on absolutely zero volume, and then the thing wakes up and you get a volume expansion, and then the thing moves. And so that's why I took that one. I took INR because I like the base, and I like the fact that it was, I like the volume, I like the base. It started well, and it's obviously now in the red on that. So I have a stop loss down here below I think 17 cents, and I'm just going to let it chop around and do its thing. If I get stopped out, so be it. That's trading, but I'm just going to let it do what it wants to do. Okay, now the stock I passed on was Fletcher Building. I'm glad I passed on that. Obviously, Anyway, it was a decent setup. It obviously was okay for day traders, and then the next day you just got hammered. So there's a lot of overhead resistance in it here, and I'm just showing everyone here. And so, these trades are always more risky. If we just go back to BWX, we had blue sky above here, okay? It's just, and even INR does too, okay? Whoops, wrong one. Okay, there's a bit of resistance back here in INR, to be truthful, but it's not as much as Fletcher Building. There's a lot of overhead resistance, and I just wanted that to tighten up a bit longer. It just if I'm going to take on this resistance, I'm only going to take it on if I have a massive, Bollinger Band squeeze, or just a really, really, really long sideways range. Okay, so anyway, I made that decision this week, and one's going well, and one's kind of not going too well, but it's still early days. So other stocks I'm watching at the moment, just base away, is Cup. A bit of liquid. You're not going to be able to get too much of that. However, it looks nice on a weekly. Looks nice on a daily. Big resistance up here. So if I can just grab a little trade on it, I probably will. Okay, so all right. Now another one I like, CNI. Pretty boring financial stock, I think. It's going sideways. It had nice volume here. If we look on a weekly chart, we have 4 weeks of consolidation. I'd like to see another couple of weeks, obviously. I mean, I say that pretty much about every trade I ever look at. It'd be nice if there was another few weeks. So, definitely think with this one. If you're new to trading, once again, just don't look at the daily chart. You don't need it. Most of the best investors and traders in the history of stocks don't look at daily charts. They just look at weekly. You read all the classic books, William O'Neill's book, Stan Weinstein's book. They don't even have a daily chart in the books. It's all just weekly charts. So anyway, enough on that. Weekly charts are super good. Okay, now just moving on to a few others. So MP1. This is a weekly chart. Base in, we have 4 sideways weeks now. I want longer on this, but this is a leading stock. It's obviously got a good business, and I have no idea if it's got a good business, to be honest with you, actually, guys. But I know this is a leading stock. I've been in it from back here when it had this big base. I'm out of it now, but I'm looking at a base again, and if it can break out above this all-time high here, on another few weeks base in, then I'm going to be in that. All right. Another one I've been looking at and am looking at is Main Farmer. So Main Farmer, this is a weekly chart. We just need to go to a daily chart here. Main Farmer today announced news that it's got some new oral contraceptive technology, that's been approved, I think, or it's in the stage of being approved. But I don't care much about any of that. All I know is that the market liked it. We had huge volume on this huge volume today. It closed near its high, gapped up. I love the fact it gapped up. I liked that it closed on its high, and then it had massive volume. And so I'm not in it, but I'm going to be stalking this super closely. So this is a breakaway gap, and I'm going to now wait for hopefully a Davis box to form or some sort of tight consolidation pattern, and then I'm going to trade it if possible. That might never set up. It might come back down. It might chop around forever. It might go to zero. I'm not sure, but if it goes sideways and gives me a nice tight range, that will be a perfect setup. So that now goes onto the watch list. That came up today in this scan I do every day, right? And people have been watching this from the start will know it, but I do this every day. It's called my everyday scan. It's got breakout, volume, stock that's left a gap up, and these patterns you can see there. So I do that every day. It finds me. It means I miss very, very few opportunities. I whack it in a watch list, and I run through that watch list every single day. And if you don't have the time, I do this full time, but if you don't have that sort of time, you don't have to scan it every day. Scan it every few days or on the weekend or whatever. But just be consistent with what you do. If you're looking at it haphazardly, your results are going to be haphazard. If you look at it routinely, then you're getting into a routine. Okay, so that's that one. Now moving on, a few other stocks I'm watching. RWC. This needs to base longer. I hate that it's sitting right below its 200-day moving average. This resistance and the 200-day are at the same point. It's like a confluence of resistance there. It's going to be repelled by that. I want this to base another week or two. There's going to be people listening to this thinking that, what's this dude crapping on about, with all this moving average hocus pocus. I promise you, if there's one moving average, you're going to look at it, whack the 200-day moving average on your charts and don't fight it. Go with it. And it's just amazing how often the stocks obey their 200-day moving averages. Okay, anything below the 200-day moving average, as far as I'm concerned, is a complete crappy stock that I don't want to have anything to do with unless it's like the most remarkable base I've ever seen. Okay, now there's just one other little tiny penny dreadful stock that I'm looking at, Troy Resources. Now, this is super risky, so it's not for everyone. Let's just get rid of all these moving averages for a sec. Okay, we have a big base forming, and this thing's tightening. So if you're the sort of trader that likes having punts on tiny little low cap stocks, penny dreadfuls, then this thing potentially is setting up. Okay, so that's one for the watch list. So my shorts that I was talking about last week, Disney, I mentioned last week that I was short from here. I've taken half off in this, this wick down day here. If I put my moving averages back on, this thing has a date with this 200-day moving average. I'll be trimming the rest off. I might have half about, I think it was 129 something. The rest I'm going to be trimming off down here at about 126 if I can get it. So that one's going well. So that's cool. MasterCard. That's not MasterCard. This is MasterCard. MasterCard trade is not going as well. I'm kind of sitting just at a tiny loss at the moment. So I'll touch back on that one next week. And, WiseTech Global. There's a lot of stocks in Aussie that just look like they're going to have a bit of a down period. So we have falling tops and we have a bit of a descending triangle happening here. And so I haven't made a decision on this one yet because the unbalanced volume is still pretty strong. However, there's shorts out there, for people who like to short. So I've been short a lot of the software stocks. And, I'm not going to run through them all because we'll be here for quite a while. And I've been chatting for about 15 minutes. So that's it for now. Be super selective, whatever trades you take, and have fun. Catch ya.